Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Hello. Let me just share my screen here. Unfortunately, Nick's not back before you guys start asking. I miss him as well. I'm not sure exactly when he's back, but I'm sure some of the A1 guys can tell you. Hope you all had a great weekend. Starting a new week quite profitably, actually, which is nice. So we've got two long positions on gold. On silver, not gold. So we had an initial entry up here off this resistance. So obviously, technically, actually kind of rough buying into resistance. Although we had a really nice drop today in the markets during London session, which you can see right here. We had drops across the market actually, which weren't huge. So technically this one lined up really well for my intraday strategy. So we came down to this 200 moving average. We had the RSI oversold. So I scaled in for a second position. So this one's moving quite nicely. So this position's actually in profit overall. We have pound Swiss. So I mentioned pound Swiss on, I think it was Friday's stream or Thursday's stream. I can't remember which one. But yeah, we are taking a long on pound Swiss because the Bank of England has held their rates at 5%. And to be honest, it doesn't really seem like they're going to cut unless we start getting pretty bad data out of the UK or data that starts leading that way. And so far we've not. So quite confident in the short term for the pound. The Swiss negative trade balance, trade balance came out negative again. We also have the S&B rate cuts that are looking quite likely. So yeah, this position essentially just a rate differential position. We have pound yen that I called this morning. I actually put this one on Twitter before I took it. So yeah, this trade's moving quite nicely. This was just a technical trade, but again, sort of a rate differential play here as the Bank of England held rates and the Bank of Japan sounded quite dovish actually, as we heard them say that they're not in a rush essentially to start hiking rates. So market participants have not taken that one too lightly. Then we're in a dollar yen. Now I'm in both ways actually, but we sent a signal to the short side. So we entered here. I scaled in short again here, and then I decided to take a long position. So the reason I did this is essentially just to hedge off the position. So if these two positions do go up to stops, I'm also in pound yen long, and I've taken a long on dollar yen. And this position's break even or risk free, so it's completely fine. So yeah, pretty safe no matter what happens in dollar yen really. So let's move on to some other markets. We can have a look. Someone's saying euro dollar buy. Let's take a look. Now, euro dollar actually looked really tempting this morning. We had a huge drop, although euro dollar or the euro in general actually isn't something I'm too keen on. And the reason is what we had was the Olympics. Obviously, they took place in France, which boosted a lot of the data coming out of the Eurozone. However, that period's over, so it's now going back to I don't want to say stable, that's probably not the right word, but it's sort of correcting itself, if that makes sense. So seeing a sort of slowdown in data in terms of the boost we had for the Olympics, and now the sort of rebalancing that we're getting isn't putting too much faith for me in the euro. Although generally speaking, I am quite bearish on the US dollar. So I can see both sides, but it's not a trade I'd be really looking to take for the long term anyway. We can take a look at gold, absolutely. So gold is up slightly on today. We have reached a new all-time high actually early this morning, right after market opened. Actually, we created a new all-time high at 26.31, which is interesting. So yeah, we can move on to the Nikkei shortly, or the Nikkei, however you like to pronounce it. But yeah, on gold, I'm still looking for some sort of pullback. We've not had, in my book, we've not had a valid pullback for quite some time, actually, since we broke out and created new all-time highs. We could argue that this pullback here was good to get in on, but for me, it didn't reach my my criteria. I would have liked to see a lower move down to this previous level of resistance and then a move to the upside, which, yeah, unfortunately hasn't happened yet. So if we now come down until the previous resistance, which is here at 2591, I may take a small position to the upside if we can get that. But yeah, essentially gold is just a waiting game now. There's not really anything you can do here. I'm sure you could get some nice scalps or day trades, but for longer term positions, so swings and things, it's too late to get in my opinion. So yeah, let's take a look at the JPN 225. To be honest, it's not really doing too much. We are up. Let's see, what are we up? 0.18% for the day, which is pretty flat in my book, really. So I was looking to short. I can't remember where it was exactly. I think. Yeah, I can't remember exactly where I was looking to short on this one, but yeah, I was short at some point. Luckily, since then we've actually had basically no movement on the Nikkei. It's kind of just ranging sideways. This is a large range. It's on the H4, so again, you could probably get some nice smaller trades on here, so day trades and scalps. But in terms of swing trades, there's nothing here really. We can see the moving averages are actually about to shift from bearish to bullish here. However, it doesn't matter, in my opinion. As we can see, we've had a very similar sort of signal previously within this range, and it's not managed to hold up. So I think if you are looking to trade the Nikkei, the plan really would see a break and a retest of the highs. So something around this level here. That's the only real play in my book. I don't really go short on the indices. It's a personal rule. I will if the data is really compelling, but generally speaking, it's not something I like to do. So this is kind of the only way I can see this working. So people are asking for GJ. So I said earlier, I am in GJ to the long side, and this is playing the rate differentials. So Bank of England held their rates at 5%. The Bank of Japan sounded relatively dovish, or, well, at least not super hawkish. They said they're not in any rush to really do anything. So it kind of leaves the yen in a bit of a gray area. So we can see the yen is now slipping to the downside. The pound is moving quite nicely to the upside, creating a very clean higher high, higher low situation. So yeah, technically and based on the central banks, it looks like a really nice trade. So I'm not looking for anything huge on here. More just a very simple move back to sort of 1929. Yeah, that's about it. The EMAs I'm using, I use the 50 and the 200 on the H1 and H4, and then I use just a 200 on the daily. Oil moving sideways. Yes, I'm in oil as well. Unfortunately, it's just not doing anything. It is quite literally just moving sideways. Pound dollar, I was in. Closed at break even this morning. Unfortunately, I had to hold it over the weekend. It was meant to be a day trade. But unfortunately, yeah, like as I said, I had to end up holding it. But yeah, pound dollar again sounds like a really good trade based on the central banks. So again, I know I keep saying this, but Bank of England held rates at 5%, and the Fed is obviously just cut by 0.5%, so 50 basis points. So already we have quite a nice factor in play here. We've also had this bounce off resistance, so you can see we've broken above, retested, and now maybe this is where we start heading to the upside. No, I'm not entering because I'm already quite exposed to the pound with pound Swiss and pound yen. But yeah, overall, I quite like pound. I like pound dollar a lot more than I like euro dollar, put it that way. Impact of PMI. Actually, that's a good point. Let's have a look at what news we've got coming out this week. Just give me a second. I think this week is very heavy in terms of US news. This has been slow for some reason. Oh, there we go. Okay, so yeah, this week is pretty heavy for US news, and that's about it. I think we've got, yeah, so we've got the Swiss rate decision here. We are expecting a 25 basis point cut. GDP, jobless claims will be quite important. Again, leading to back to the FOMC meeting, we heard that it was very data dependent for November. I am edging more towards another rate cut. I think we're now in the cutting cycle. But by how much, I don't know. I'm going to need to see more data come out. But yeah, it'll be interesting to see how the markets develop over the next sort of month or two. Then we've got core PCE, but yeah, essentially nothing. We've also got rate decision for the AUD, which will be interesting as well. Where do you get the fundamental updates on currencies, CHF and JPY? I get them from bank reports. Actually, speaking of that, I'm going to give you guys a quick breakdown here. This won't be a long one because that's a lot of effort to read all this, but just briefly, the AUD significant update, sorry, no significant updates. General sentiment suggests that commodity-driven currencies like the AUD could strengthen in potential rate cuts in the US. So generally speaking, the AUD could perform quite well. We can see copper is also performing quite well recently. The CAD has gained against the US dollar post FOMC as the US dollar shows signs of weakness, and CAD tends to benefit from strong oil prices. Hence our long oil position. The CHF remains stable, but is seen vulnerable to fluctuations in global risk sentiment. CHF is also viewed as very overvalued at the moment, so keep that in mind. The euro strengthened against the US dollar after the FOMC meeting, with euro US dollar rising to around 1.16. European currencies like the euro are expected to maintain strength as the US rates decline, boosting the attractiveness of the eurozone. Just trying to see if there's anything super important here. US dollar, the US dollar is weakening. That's a given. Yeah, that's about it, really. So yeah, we've got some trade ideas here, and this is just based on economics. So again, these aren't signals. I'm not telling you to go and take these trades. We've got the Australian dollar. Australian dollar being highly sensitive to global growth and commodity prices is expected to benefit from the Fed's rate cuts and general easing in global monetary policy. AUD is is typically supported by rising commodity prices. How significant is services PMI? Yeah, it will be. I'll move on to services PMI. I think I was meant to talk about that and then completely got sidetracked. I'll go back to the PMI in a minute. Euro dollar to the long side, crude oil to the long side, S&P to the, actually I haven't updated this. S&P is also to the long side, copper and gold as well. So it seems like quite easy markets to be trading at the moment. So when is PMI? Let's have a look. PMI is today in 11 minutes, actually. Good thing you guys pointed that out. So we can take a look and watch PMI. I think we should actually be swapping over to, I think it's Chris after me. So I might head off so Chris can do it, because I know Chris is probably a lot more experienced in the economics than I am. I know he's been doing this for a very long time. But in general, S&P global manufacturing PMI, we are expected to have a rise. So we are expected to go from 47.9 to 48.6, and also 55.7 to 55.3. So a drop here. So let's take a look. How did you plot the EMA on the chart without the 200 using a daily show whenever you switch? You can just add a 50 EMA and change the setting on like the visuals. You don't need to have a 200. So yeah, PMI will be quite important, but I don't think it's going to be a huge mover for the dollar in terms of it's not going to determine the trend for the dollar over the next month. It's more just going to be, we'll likely see a possible pop to either side. It could be obviously depending on what the result is. It could be bullish, bearish, but overall, I'm not expecting it to be some huge thing for the dollar where we start seeing something like this. It'll be more just, day-to-day news type of reaction, if that makes sense. So what do you think about gold COT? Let's have a look. I'm not actually sure what COT is on gold at the moment. We can go over the Australian dollar in a moment. We'll have a look at CAD yen as well, because that sounds interesting. So gold is still being bought. I know central banks are buying gold as well, as far as I remember. That might have changed. But yeah, I think there's nothing really in terms of gold bearishness. Net change on gold, not a huge one. It looks like they've increased by 0.57. But yeah, still very bullish in terms of the COT data. So let's have a look at CAD yen, then we'll go to Australian dollar. Yes, I see what you're looking at here. It does actually look quite nice technically. It's just the case of I'm not sure I want to be buying this market. Oh, sorry, really involved with this market either way. So the yen isn't doing too well recently. You can see over the past couple of days, it's been pretty bearish. The CAD isn't really the best thing to sell at the moment, especially if we're expecting higher oil prices. So actually, sorry, I'm talking nonsense. I'm talking about shorting. If we have strong oil prices, we could expect obviously CAD to benefit from that. If we have a weaker yen, we could also expect this market in general to benefit to the upside. So generally speaking, the economics don't agree with the technicals in my book. So obviously my technicals with the FIB and the EMAs are pointing to a short position, whereas the economics are more, or the drivers are more pointing towards a long position. So it's too conflicting for me to really get into this market. So let's go to AUD USD and we can take a look there. So yeah, I think the Australian dollar US dollar is actually possibly quite a nice play to get into. So as I was saying, the Australian dollar could benefit quite nicely from rising commodity prices and also benefit from the Fed rate cut that we had. And then obviously, like I said, I'm expecting a weaker dollar over sort of the short to medium term. So I'd be quite happy to see this sort of retest of this fib level and previous support and ride it to the upside. If we can get that, we'll see. If we don't get the pullback, it's similar to gold in terms of I'll just sit on my hands and wait. My portfolio is quite busy at the moment, so I'm not desperate to really get into anything. If you're already in Australian dollar buys or Australian dollar US dollar buys, to be honest, I'd sort of just sit in them. I think you've got quite a nice potential there. Let's see. You're in a long on Swiss yen. Some thoughts on that position, please. I think Swiss yen is a little bit tricky. As I said, the Swiss is pretty overvalued. The S&B is projected to be okay with that for the short term, but for the long term, yeah, you might be in some trouble there. So I wouldn't be looking for a correction back up to, pre-unwinding pre-unwinding price or level, which was up here. This is obviously when we saw risk off and unwinding of carry trades. We saw pretty brief market crash, if you want to call it that. So I wouldn't be expecting to move back up to that level. If you're in a short-term buy, maybe just benefiting from the short-term yen weakness we're seeing. But yeah, generally speaking, I wouldn't really like to be in a position on this market. From where do you get the fundamental updates on currencies? I already told you it's on the bank reports. So I said we get them from our Discord. Angus, hello, good to see you. I was long on gold. Let's have a look at this position on gold then. So you are long from 2616.56. I think this is tricky. I think, to be honest, you're playing a dangerous game because you are buying essentially at all-time highs. Now, it's not always a bad decision. You could have caught a really nice smaller pullback before we continue the rally. But you also could get caught in quite an aggressive move to the downside if we do see some profit taking. So I would, if I was you, I'd be managing very, very carefully. I'd be looking to move stops as soon as your strategy says so. Or, of course, if you don't move stops, that's fine as well. But you do need to be aware that you might be caught in some sort of downside move here. But, of course, that might not happen. That's just my cautious perspective. Arjun, the more you spam, can I check something, the less likely I am to do it. I will do, but that's your warning. So I'm in dollar yen. We're in mainly to the downside, but I've hedged with a position to the upside as well. And the reason is more because of the... So the short positions were not my trades. They were sent by one of my traders at Elite Traders. And I'm just a little bit cautious personally on the yen weakness we're seeing. And I'm also, as I said, quite bearish on the US dollar. So I'm just hedging with this position to the upside. So no matter what happens, I'm safe. So if we do go up and hit stop losses on these short positions, this long position covers it. Whereas if this one goes down and we see these short positions play out, this position's risk-free. So I'm completely safe either way. But if these signals weren't already sent, I wouldn't personally be in the market, just because I'm bearish on the US dollar, but the yen also isn't in a favorable place for me. Oh yes, news. Let's have a look. A1 guys, can you send me a message if Chris is here or not? If Chris is here, I'll let him do the news if he wants to. I'm quite happy with that. If not, I can do it on stream. It's just I think he can probably do a little bit of better coverage than I can. So let's have one final quick look because Chris is coming on very, very shortly. Pound dollar we've already covered. CAD yen we've already covered. You scalped gold and hit TP. That's great. Good to hear. Okay, let me pull up the news just in case. Give me a second here. Where are we at here? There we go. So we've got news coming out in 1 minute. I'll move this over to the side. It's a little bit far. Do that. We can get the dollar up here and get rid of this. There we go. Okay, so we can watch what news does. No Chris yet. He'll be here at 10:15. Oh, I need to double check how I think I might have got confused with the time zones here. Oh, okay. I'm an hour ahead almost. My bad. So let's see. Let's see how PMI comes out, and then we'll go over the indices and we'll see what the effect is there as well. Because we've not looked at the S&P yet. Actually, let's just have a quick look just before it does come. So we've got the DAX up 0.5, the Nikkei is up 0.3, Nasdaq up 0.2, UK 100 or the FTSE's 0.55, US 30 and the Dow Jones are relatively flat. So nothing too interesting there so far. That might change very quickly. I've been rushing through. I thought I got confused with the times. So maybe I need to recover some things in a bit more detail. So should be coming out in 2 seconds. There we go. So we've got, not great PMI for manufacturing September. So it came out at 47 or 47 flat. We've got a rise from consensus on composite PMI from 54.3 to 54.4. We've got a slight rise again in global services PMI from expected at 55.3, and it came out at 55.4. Let's change this to candles so it's a bit more clear. So yeah, slight downturn on the dollar, but so far no great move. Is it Ivan? I think I'm getting a bit mixed up here on who is on next and at what times, but it's all right. Could you hang out for just a moment until Ivan arrives? I can let you know. Yeah, no, it's all good. A1 guys, don't worry. I think I was just getting a bit mixed up with with the times and who's coming on. That's my bad. So yeah, slight move upside on the dollar actually after a short move to the downside. But yeah, nothing crazy here. So far, we've got a small move of 0.14%. Let's have a look at the S&P. Moving to the downside quite gradually. US 30 downside, FTSE of course not much. So yeah, indices are down so far. We've got dollar yen actually moving really aggressively to the upside. What else have we got here? Euro dollar also moving to the downside. So there you go. Not too much in terms of huge reactions, or should I say higher time frame reactions. But yeah, short term could have caught some nice scalps there, I guess. The PMI from the UK and the EU came out negative today. Do you see that? No, I didn't. I'm actually really behind. I'm really bad, actually, for a trader. I'm really bad at keeping up with day-to-day news. The problem I have, everyone has pitfalls in their trading, but my biggest pitfall is I look at the larger landscape of the economics and I completely overlook day-to-day news, and it's a really bad habit to be in. So let's see. Composite PMI, yeah, quite negative for the euro. The pound also came up quite negative. Yeah, I mean, not huge, but there you go. So yeah, dollar strength, but I don't think that's going to be sustained, really. I'm actually going to close out of my dollar yen position here, my long, I think, in a moment anyway, when MetaTrader decides to load. Cool. Okay. So is there anything else you want to cover? If there is, let me know in the chat. If not, we can just continue having a look at a couple of markets here. Pound yen positions moving really nicely. The pound Swiss is relatively flat, nothing really there. Silver also moving quite nicely. Oil finally moving to the upside, but still stuck in a sideways range. Pound yen, again, moving to the upside quite nicely. Pound Swiss, maybe we can continue to the upside here today. Okay, so I'm a complete beginner. Can you explain what you're doing right now? Leo, right now, this stream is essentially just free analysis. So you get, I don't know if you're new to the stream or if you're new to trading, but I'll explain both. So this stream is Trader Nick's and his company A1 Trading. He has guests on like me and the guest that's coming on pretty soon. And essentially what we do is all give input into what we think the markets are doing and what we can expect. So it can be futures, it can be stocks, it can be commodities, currencies, it can be anything, depending on what that guest specializes in. And right now we are just going over some currencies because that's my main asset. We just watched some dollar news that came out. Long-term bias for euro dollar. Euro dollar, let's pull that one up. So I think personally, I don't really have a bias. Just going from the perspective of what we just read on the website of the Eurozone is holding up quite well. But we also could expect some slight weakness as we come out of the sort of Olympics period, although obviously that's not going to be a huge thing. It's more just going to be some slight news releases that might not be the same. And we match that with the Fed cuts. I'm more leaning to a bullish aspect on euro dollar. But again, it's not something I'm willing to really get into now. Maybe if we start seeing these highs break, I'd be looking to go long. And then let's have a look for a target. We are seeing quite nice downside rejection on the daily, actually. But yeah, you can see this level throughout here is pretty tough, and it's going to be quite hard to break through. The next level from there isn't too far away. It's at 1.124. So I guess that would be the first take profit zone for me. So yeah, it's just, even if we do get a break of this level, you don't have much in terms of, you've got a 70 pip move there. And for some people, that might be great. But for a swing trader, that's not that much. And obviously, that's sort of immediate take profits. You could target somewhere much higher. So around the 1.147. But yeah, it's just not a trade for me, really. Can you look at NASDAQ? Ivan has prepared for your... Ivan has arrived. Prepare for Yen Man. Okay, great stuff. Guys, thank you so much for watching. Don't go anywhere. We've got Ivan coming up. A1 guys, thank you as always. Chat, thank you as always. Have a great day. Enjoy the rest of your weeks. Hopefully, I will see you guys soon.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello, everyone. Welcome to... I don't know what I'm welcoming to even. To the ends! They're moving! Everything is great. So we have a bit of a central bank meetings last week. Love it. And then I believe we should go ahead and start going over to the expectations for, I guess, going forward. That the Fed is, by the market, expected to have another 50 basis point rate cut, 50-50 at this point. But by the end of the year, 75 basis point cuts, which is from the start, cutting 125. Hello, Angus. ECB is probably gonna cut next time. Bank of England is probably gonna cut next time. Bank of Canada is probably gonna cut 50 next time. RBI is probably not gonna do anything at all. RBNZ, which is New Zealand, is probably gonna cut 50 in their next meeting. Oh, hallelujah. There's a lot of 50 here. What is happening to the world? Is everything crazy? Is everything falling? That is fantastic. That is very good. So, and then Swiss National Bank, 61 probability for 20 basis point rate cut. And Bank of Japan, nothing whatsoever. What does that mean for the markets? The almighty yens. And I said a long time ago, and a long time, no see. I said, though I was wrong. I said down. Okay, I said up from 26th of August. Everyone's tired of listening to that, but that's true. I said peak. I said third. And then or second, maybe. And then I said hold down to 23rd. And where is 23rd? 23rd is on the bottom. I'm sorry. May you all, Forex, mighty God, forgive me for I've sinned. And then Laura says we should oil it up. So, yeah. So, I was wrong. Can you guys forgive me? I do apologize for being wrong. But, yeah. We have done not 3-6. We do 180. I love it. I want a deeper pullbacks, to be honest with you. I haven't entered. I look like a fool because now it's 70 pips up or whatever, 80 pips up. What do you do? There shall be no forgiveness. Okay. What do you need? How many cows do you need, Normsy? Let's get a recovery guy. Yeah, it's probably true. Oh, okay, cool. Will do. I'll do one thing first. Gold. I told you I want this one to go deeper, lower, and I said to who? I don't know who I said it to. Somebody asked me, "Will we go to 260?" And I said, "Yes, we're probably going to go to 260." And then I want to pull back, and then we never got a pullback, and now we're making higher highs. And yeah, somebody sold gold, and I was like, "Oh my lord, clench!" Because that's a bad idea. Sorry, I was right about one thing. Gold will go $1,000 up. Yeah, of course. No, sorry. What would we do with $1,000? I would buy yen pairs, hold, clench, and pray. By the way, no financial advice. Don't listen to whatever I'm saying because that's just stupid. Okay, whatever I say is stupid. So I might go. I might go over to doing something else. Okay. Are we landing? A bit more coffee. Let's land. Let me do some more. Because James was like, he was serious. He was straight on, to the point. And I come here, I was like, Clown, I apologize. Coffee. We'll do some secret coffee here. So 2 seconds. 1, 2, 3. ASMR. We're doing Forex ASMR. Great. We are looking at, well, what's the deal that didn't go well for me? One thing. Mudazir says, what about Australian dollar, US dollar? Here we are, okay? Are you whispering to Yeah, I do. I do that in my sleep. Forex gods. To be honest with you, can I try to be serious? I'm never being serious. If Nick ever listens to this, Nick, if you're somewhere on a beach somewhere in Sorrentino, or like between white houses and whatever you are, or even have one grain of sand between your toes, listen to this. Okay? Whenever you are gone, we're having fun. Okay? So, higher high, higher low. That is what it is. I didn't like the pullback. I want a deeper pullback. But what are we now? We are risk on. Okay? If we are risk on, what do? You buy. Australian dollar, US dollar. Can we look at retail sales? Where is retail sales? Major currencies. Where are we? Cool. There we go. Major currencies only. If we are on major currencies, what is retail doing? They are sell. Okay, great. That means that Australian dollar, US dollar is probably going to go higher. Pound is probably going to go higher. And euro is probably going to go higher. When they are crossing towards like 75, 80, that's like peak. So, sorry. But I believe that Australian dollar, US dollar is going to go higher for a couple of reasons. Dollar weakness, for whatever reason that is. Why did we go risk on now? I'm not entirely sure, other than we are rate cutting. And we have some highs to break at 69. 69 is always nice. So, 69, a quarter is probably 60 pips away from now. So yeah, I would argue probably would have been the best. Simply the best would have been 66 entry, then max 67 entry, and now we are fighting string. We are now fighting higher highs. Let it develop, and you may use that as support and resistance, but it's high. It is not. It's not a great setup. It's high. I would rather buy there, which I could have, should have, would have. Should I also have come down to 65 something? That would be better. But my kind of levels would be like absolutely perfect would be like this. That would be buy there, which you could have, come back again, and then back up again. It's kind of like here is very high. High 57,000. Oh, sorry, 5715. Where do you think the stock market's gonna go? Because somebody asked, right? Nick will be spawning soon. Yeah, he will be spawning. I hope he will be spawning. Oh, Trader Nick, I'm glad you're having fun. I'm always listening. He's here. Okay. Great. You know, beach today. I went for a hike through Sorrento. I told you guys. I told you, Sorrentino. Santorino. Sorry. Santorino. Very beautiful. Having a glass of wine now. Yeah, okay, cool. You do you. I'm not gonna bother you. You know, I'm just a 3-hour flight away, by the way. But would it have been fun? I'm sorry, a digression. Would it have been fun to sneak up on Nick if I just gotten told by Chandler where on Earth he is and give me like a geolocation on him? We could have sneaked up on him. Wouldn't that be fun? That would be okay. May not have a lot of value for a lot of people, but at least for this community, it would have been stalking. I would never come back again to this trip because I'll be stalking. New age trader. No, that's terrible. No, it's great when you're friends, but when you're strangers, maybe not. Oh, Nick would be so happy, and especially his wife. She'll be thrilled. She'll be so happy to see me. You know, who wouldn't? I'm a bundle of joy and a bundle of party poopering because then they can't be alone. So that's all. No, S&P 500 is a bit high for me at the moment. I would love it to come a bit lower. I'm hoping it will go lower. It'd be great to go lower in this great country. The most beautiful thing ever. Yeah. No, it's the most amazing thing ever. So if this would just come down, it would be the best. It would be the best. Yeah, great country, great women. Yeah. So that's kind of like my setup. What I would love to see, but will I get it? Probably not. So it's gonna be a higher high, higher low on the shorter term, and then going like that probably would be a better. What's your time frame to go? 4 hour, 1 hour. So 4 hour analysis, 1 hour entry. But time frame wise, people, it doesn't really matter. It doesn't matter. The reason is I try to think about the high time frame more than the low time frame, because if I do 5 minutes, 1 minute, 30 minutes, I get smoked. So I lost too much money there. It's traumatic. It's almost like I'm gonna cry about it. But yeah. Biggest real top G. Yeah, cool. He is, Mike. Never gonna love it. Never gonna love it. Never gonna lie about that. I would like you to understand how to use inflation data, comparison to interest rates, comparison to determine the bias, for example, a market like your dollar. There's a couple of more items to add to yours. So currently we have euro inflation is 2.2, I think it is. Euro area 2.2 inflation. I bet 136. 365 interest rates. That is 140. Sorry, can't even do math. 145% difference. That's less than 2%. That is kind of within range. For dollar, it is 2.9. I think inflation was last time I checked. I might be wrong. And now the interest rate is now 4.75 to 5.00%. So the holy grail here is basically what dollar does matters. So where dollar is weak, euro gets stronger, even though they have inflation 2.2 and 365 in interest rates. That is the most important. That is not so important because dollar moves, dollar does. What does it mean? How can I prove it to you? Let's check. Okay, so dollar index are currently in itself falling, right? As a falling market. On top of it, if I add, for example, 6A1 exclamation, the Australian dollar futures, and then new price scale, and then I revert it to make it the same. They are kind of in the same league. Okay, so not necessarily always, but as you can see here, when dollar fell, Australian dollar increased. Okay, so if we then do euro, one exclamation, same new price scale, probably, and that one goes invert as well. Euro is much closer to what dollar does compared to the Australian, right? That's pretty evidently within June, July, and much closer now in September, August, September. What do you mean by that? It means that whenever dollar moves, euro moves oppositely in greater scale. When dollar moves, Australia moves. So when Australia moves, dollar moves doesn't necessarily always happen. How do I know that? It's because in the periods going up to now, we have been in very strong dollar territory from 2021, 2022, up to 2023 somehow. And if you say that's dollar, dollar index going higher, 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 what has the Australian dollar done at the same time? And that's kind of your question: is what drives who, and is there any correlation? And if I correlate this one upside down, in as much as dollar did rise, Australian dollar somehow did the same thing. The only discussion here is to what degree. Not so much here, but a lot more here. So when US dollar moves, Australian dollar moves in this case, but not here. So Australia is not so correlated to dollar. In the same scenario, this should actually be crossing each other, by the way, because Australia, at the same point, inflation-wise, let's see if we can find like a peak or somewhere, like around October 22 in euro. Sorry, that was euro. I want Australia. That was interest rate. Sorry. Yeah. Q4 2022 7.8. Q4 7.8. Q4 in 2020 who? 2022. So that is a bit. Oops, did I see a bit more? Cool. I'm sorry for being off this rail now. I apologize. Yeah, let's say there. Around 3rd of November 22, inflation is very high in Australia. But if I go to America at the same point, so that is November 22, inflation, and end of 22, that is 6.5. 6.5 at the same time. What is happening after that? Australian dollar is going at the same rate as the dollar. Both of them has high, but they should actually be crossing. They shouldn't go in the same direction. Because dollar here is falling and Australian dollar is rising. They should basically just go sideways if they were 100% driven by their own economics. Okay? Make sense? Thank you very much. So in that sense, yes, you can use interest rates. Yes, you can use inflation data. But remember that dollar moves, dollar decides. Even though your country has high or low interest rates, low or low inflation, it's still dependent on what the expectations future for America is going to be. Dollar and Australia has a negative correlation. Yes, they do for most of the times, as I just proven. Today's PNL is negative 0.0. I'm not going to talk about that. That's not too bad. But if that's your daily, all right, cool. All right. Just don't do anything stupid. Don't do anything stupid. That's what I'm going to say. I'm holding long S&P 500. What's your opinion on it, sir? I think that's probably, if it's going to hold for a long term, that's 100%. Or 10 years, that's 100% win rate. But yeah, that's the direction I would also be in. So, what's your must-read macroeconomic books and recommendations? I don't have any macro books because everything is in my brain. I do apologize for that, for having an economics degree also containing macroeconomics. So I don't have any book recommendations. I do apologize for that. But I must say, whatever you're learning in Forex economics is better than macroeconomics. What do I mean by that? I mean by that, what you're supposed to be focusing on as a trader is also, within here. Should see if we can find the right one. Would be great. Click the wrong one. For example, in terms of economics, the degree of change in the GDP, in the PMIs, in the retail, in employment, in interest rates is kind of what you need to look at. When you look at generally, you can also look at something called the leading economic index, LAI, posted by the Conference Board for America. That has I think is it 11, sorry. It's a composite. So it looks at 15 different kind of indicators for the American economy. So it gives you an average of how things is working. That's another way of, how's things going. So if you look at the LAI for 2024, 23, 24, it is a steep hill downwards. So yeah, so just having that just have that in mind, that the LAI, the general economics in America is not doing at all great, this is the indicators that they're looking at. So that's kind of one way of looking at it, just generally. But what I will also say is, as a macro trader myself for a very long time, you pick and choose. Another thing is, sorry for digressing far off what I'm supposed to be doing here. I do apologize for that. But point is, saying very fast, is different things has different way to different times. So now last week we saw that we had he was talking about the labor market being falling or contracting more than normal, or higher than normal. He also said that in any fall now in job vacancies is a fall or a worsening in the job market. We have come to the equilibrium that even though if job vacancies falls, there's no contingency. Before it was a massive, but it was a large difference. There could be drop in vacancies, but still a lot of people will still get jobs. Now we'll come down to an equilibrium where if there is less jobs posted, there is going to be less people employed. So the job market is at a more important stage. It wasn't a month ago. Second of all, we might have a reduction of 800,000 jobs. May have. It was a bit higher than expected for last year. A month ago, it was inflation. Everything was inflation. So you have to make the job, do the analysis. You have to look at what is the market looking at right now within the macro. And the book is not going to tell you that. So what I'm talking about is applied science, or how you apply the macroeconomics is your greatest gift to you as a trader, rather than looking at books, because you learn on the job. Make sense? Great. Forward. Go. What's supposed to be Euro today? Okay, let's go. I still don't like it, mate. I don't like it. It's not great. It's not good. It's not great. I lose money here. All right. No. Come back down. Go home. So what I mean by that is I don't have a competitive advantage in this scenario. I could have bought or could kind of buy that kind of pullback. It still isn't great because I still have trauma from trying to buy those areas. So I apologize. No setup there. Australia did not great. Pound. All right, cool. Bit of a reversal there, but price didn't come down. You could have argued that would be the buyer price, but now it is gone. So hold your horses until until it makes a better setup. So I don't know what the setup is going to be. I have something in my mind, but this isn't great because you can end up buying that. You know what I mean? We're not here to lose money, people. We're here to make. Oh, the FOMO. Sorry. I saw it. I saw it coming. I saw it. But I was like, my salty kicked me in my legs this time around. I should have bought there. But okay. Also, it's a lot of pips here. So and I saw this one coming, and it is like 800 pips ago or something. Wow. I know, sir. Pound yen, by the way, I'm going to give you like a big warning here. It is not normal price action. These pips are expensive and a lot and moving faster, and you can change your genes. This is not a normal radio. This is 800 pips from top to bottom. You need a way bigger stop loss to be trading this one. Okay? Alert! But on the other hand, that was a high, low. But I still don't like it. It wasn't down to my center pivot.
Hello, Ivan.
My fun.
I'm here to set you free, Ivan.
Oh no.
Guys, thanks for tuning in to see Ivan. We always love having him on. It was a nice way to start the week. And we had Nick join to watch, so that was cool. Guys, I've been putting Ivan's YouTube in the chat, so make sure to go sub to him. You'll find more of him over there. And he's also in our Discord group. He does exclusive webinars in there. So another great place to get more of Ivan and more what he has to say. So Ivan, thanks for coming on today.
Thank you. You're welcome for the clown show today.
No, it was great. All right. We'll see you next time. Nick should be back, I think, halfway through the week. I think he's coming back Wednesday or Thursday. So we'll let you go there, and we're going to move the show along to Chris Pulver. He's waiting. So, Ivan, thanks for joining us.
Thank you very much for having me.
All right, guys. We got Chris Pulver on the way right after this. Stay tuned.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey, everybody. Happy Monday. Welcome back. I just had a couple trades close out for some profit. And let's take a look at everything today. So trades this morning, a little bit of SPX action, and also a trade that I posted last night in the Discord channel. I did a trade on ES, the old E-mini futures. Here's what the trade looks like. Let me go into ES 1, 2, 3 analysis. You can see, let me go this way here. Should be a little bit larger. There we go. So right now, if price stays where it is, then we have full profit. This would have been a fill for about 50 cents. And I wanted more than that, but it's 50 cents, which means, per contract, I'm getting about $25 per contract for profit. If price stays where it is, easy win. If price works its way back down, I do have a profit trap towards the low end of the expected move today. So if we get down towards like 57.50, which right now would be about a 25 to 30 point move, there's a chance that we may end up hitting a profit trap, which gives us about $250 instead of just the 25 on the tail credit. But it was a pretty good trade overall, looking pretty good. We'll keep an eye on this one for the morning, and this is going to expire later in the day. So I got filled for 50 cents. I'm looking to see if I can keep that 50 cents. But I also have the profit trap, so I want to keep an eye on this one. Right now, this actually might close out for profit early. Let me see. You're trading for like a 25, 30 cent debit right now. I suppose what I'll do, I'm going to go ahead and cancel my take profit order and just keep an eye on this for the morning. Because if by, let's say, 2, 3, 4 o'clock today, if this thing actually drops down by maybe 25 or 30 points, then I've got a profit trap right there that I'd like to see hit. So that's one trade for the day. The other two, SPX. They were nice little closeouts for the morning. Just grabbed a couple of bucks right out of the open. And price is drifting a smidge higher today. Here's SPX. I see virtually nothing to the downside. You see SPY. This market is loving this melt up environment where we just keep going up. We did come back and try to fill the gap with a little bit of a wick right there on the SPY. Looks like we're just in a bit of a melt up. Highs from Thursday last week around 571.13. We could probably revisit 570 to 571. We'll see if that's the case. So watching that for today. News came out this morning. We had PMI manufacturing, PMI services number. Services came in as expected. PMI, I think, was a slight disappointment. Market still hasn't shown any sign of like, oh no, the PMI numbers are down for manufacturing. Well, last time I checked, the U.S. is hardly a dominant, manufacturing country compared to our services. So anyway, that's what price action is doing thus far today. Previous all-time highs. This is SPX around 57.33. So I'm just kind of enjoying the little melt-up scenario. If it goes higher, it goes higher. I do have some hedges to the downside just in case if we come back and do a gap fill from the FOMC last week on Wednesday's close. I will be watching for that in the near term. Otherwise, I'm looking to see if this market just wants to keep going higher. So let's go to the daily chart here, take some requests. And let me go ahead and take a look at a bit of everything today. So my, top down, the S&P, here's what I'm looking at for analysis. What happened to my, what the heck? There we go. I was like, where's my analysis? Anyway, so last week I was looking at, Wednesday's close to Thursday's open and close, kind of marking this as a potential indecision zone if the market's unable to, continue to go higher. And maybe it is, maybe it isn't. I just thought there'd be a lack of catalyst if we're missing a wave of employment news, we're missing inflation news. We still have the Fed coming out in November, but also the market can front run that entire situation where it's like, you know what, we'll wait. Or rather than wait for employment news to actually hit the headlines, let's just make a run and try to, push up higher. And if the market disappoints, then we'll reprice. But if it doesn't, we keep going higher. Or the market just is caught up between a lot of volatility from Wednesday, Thursday last week, and we see some indecision. So for my SPY, I'm watching these two levels. This high is around Where's the value at? It's sitting right around the Thursday high, which is around 572.88, and then the Wednesday low for the close of FOMC, that's around 561. So I think we could see price somewhat contained this week. If you go to the NASDAQ, same thing. Wednesday close to Thursday's high, looking to see if price stays indecisive. I do have some volatility plays out to October 4th. You go to the Dow, Wednesday's close to Thursday's high, somewhat indecisive. The one thing the Dow's also running into, just based on these recent connections, would be resistance, and if we have this area acting as resistance. Now, I don't want to call the high on the Dow. I'm not going to. I think this market could still, break and go higher, but it would also make some sense that we do have some volatility right in here. That's around the halfway point of this range. If we have any dips or pullbacks on the Dow, and that's big. I mean, that's a monster correction on the Dow. That's essentially saying, like, we're going to do the same thing we did back in July. I don't know if that's going to happen. But if we do have a pullback here, I might be looking to establish some new positions on DIA. If we come back into the midpoint of this area, probably the same type of thing. So either getting long, looking to see if I can get filled on some type of support level on the DIA. And then the Russell, same type of thing, some indecision here. There's still almost 10% to get to the all-time highs on the Russell. To me, that's a fairly attractive index play for the rest of this year into Q1 of next year to see if it does play catch up and gets up towards that. I think the price is like 240 to 245 here. So price is around 244 and change. I'd love to see if the Russell can catch up. The issue is it's Russell 2000. Your top performers are carrying most of the performance. It's similar to the S&P where you have, it's the market breadth has been improving. Last week we saw the advanced decline line get up to 68% of stocks advancing, 76% of stocks advancing. So the market breadth has widened out, which is a good thing. It's not all Mag 7. It's not all semiconductors. It's not all NVIDIA. It's certainly broader. We've seen utilities perform. Let's actually go year to date for sectors and see what last week looked like as well. So last week, let's go 5-day performance. We saw energy actually lead all sectors last week, outperforming the S&P as well. Financials were in second place, 2.58. Communication services, consumer discretion. You see utilities continuing to do pretty well. We go year to date. Impressive run, man. Utilities leading still at 26.45. What you're noticing in the utility space is you have some energy companies, energy utilities, you're starting to see more and more alignments with, well, because of AI, and this is, it could be a story right now that the market's just getting behind and pushing these things higher. But if the infrastructure demand for AI is such that huge utility companies are saying, okay, we need to expand the grid, we need to expand our services, we need to be more efficient, blah blah blah. And then you also see that with huge pockets. Utilities is up for a reason, and for everyone to look at. I was skeptical, thinking like, okay, gold is leading and outperforming the S&P this year. Utilities is one of the best performing sectors, if it's now the best performing sector. When you have utilities and financials leading the S&P 500 in all sectors, I get a little bit skeptical. But what this also is illustrating is a bit more of a rotation outside of just the Mag 7, outside of just AI, outside of just semiconductors, and actually broadening out into other spaces. Now, utilities is typically a high debt structure, but it's in high demand. But also with rates coming down, that's certainly helping their, I'm sure it's helping their balance sheet. Speaking of rates coming down, November is looking for another potentially 25 to 50 basis points. That's 2 days after the election. December, another 25 to 50 basis points. These numbers are going to change like they did in September, but the Fed is likely still going to be cutting and possibly up to another, let's say, 75 basis points to maybe even 1% by the time we wrap up the year in December. So Fed rates are coming down. If I go to my watch list here, mortgage rates, went from 7.8 all the way down now to 6.09. And this, before we printed the 50 basis points cut last week, we were sitting around 6.2 on the 30-year mortgage rate. Now we're at 6.09. Obviously, I'd like to see this drop a little bit lower. The best thing to track is, where is the 2-year yield? The 2-year yield is sitting right around 3.6%. Historically, that's always been kind of the neutral the neutral expected area for the Fed funds rate to be at. And so if the Fed actually shoots past that and maybe cuts into like 3.5%, 3.25%, that's fine. But we'll be watching between the 2 and the 10. Right now, that 2 and the 10 is around 17 points inverted. I think I have that right here. Where the heck is it? Fed funds rate, 3-month, 2-year, 10-year. There it is. So the 10 and the 2. This is the what was the inverted yield curve. Okay, inverted yield curve, and now disinverted. Now, historically, this isn't a good thing. When we come out of this inversion, there is a tie and a correlation with labor. If we're come out of this inversion into disinversion, labor numbers will continue to be important. The Fed is hopefully staying ahead of that with the 50 basis points cut and more to come. And I do wonder if this actually does turn down a little bit. I'm not saying it has to go reinvert, but I thought that probably wouldn't be a bad thing either, because this was the strongest, tightest labor market that we had, with also the highest interest rates we had. So now we've been loosening in labor, but we're now loosening in monetary policy a little bit. And I think the word easing, I mean, obviously cutting potentially 2% in the next 12 to 16 months would be considered pretty dovish and loosening, but it's because we stayed restricted for so long. There's a bit of that extra cushion that the Fed can cut rates. Okay, so anyway, there's your tracker right there for the 10 to the 2-year. Watching the mortgage rates as well. Futures market, I'm also tracking a couple things. This is your Bloomberg high yield bonds. This is AAA versus triple B, AAA versus triple B and C. If this starts to head lower, sharply, then we have potential recession concerns. Also, not just initial jobless claims, but continuing jobless claims. Everyone's all worried about this. Looking at the Edge Finder, we've had consistent jobless claims. Yes. We've obviously had, disappointments in non-farm numbers. We've had an uptick in our unemployment rate, right? So all these things are advancing. But from a historical standpoint, if we go to, let's go to this chart here. This is continuing jobless claims. Let's just go back to say, all right, when was our last real recession? We'll say, so COVID, obviously that's a bit of an outlier. The last time we had this was back in 07, 08. Now, this is the same thing that we talked about when it comes to the SAHM rule, SAHM, that the running 3-month trend in unemployment it's 0.5% higher than the 12-month low. That triggered this year in July. I think what the Fed is clearly trying to avoid. I mean, look at the last time we saw these big upticks. So when we see continuing jobless claims trending higher, it doesn't look good. Now, it's not so much the number, right? Continuous jobless claims, it's not so much the number as much as it is the rate of change. So, for example, if we're sitting here at 220K on continuous jobless claims and we jump up to 250, okay, it's not the 30K that we're really necessarily worried about. It's the rate of change if we go higher and higher month over month, and it's the percent of increase. That's what the market's going to be taking notice of. And so if we start to trend with a severe rate of change, that's likely going to have, consequences of, oh my gosh, the labor market is becoming a problem. So we need to keep an eye on that. Okay. All right. So top down indexes wise, I'm looking for some indecision based on some of the noise we saw last week with Wednesday's close into Thursday's high. We might just have a lot of indecision this week. I will probably end up looking at a position in a similar way where I'm going to stay with a bit of this bullish bias. I do have some hedges down here out to the end of, I think I put one out to this week as well as the 30th, just in case. I mean, it's a very small risk trade. If we get down below 560, that pays pretty well. If it gets to 560, I need this to get back down to like 565. That's a little bit of a hedge. And then on the ES trade, I've got a hedge as well. So, I'm just watching price, but there's not really a ton of news this week. We're pretty light on earnings. The only earnings report that I think might matter would be Micron. Micron has earnings on Wednesday after market close. I wouldn't mind taking a look at that one this morning just to kind of price in something. I'm not necessarily that interested. Compare Micron to semiconductors, okay, or compare that to SMH, or compare that to NVIDIA. Okay, I mean Micron is sitting nearer the lows than everything else, so it's not the same correlation. Nvidia looks an awful lot like SOXX. It looks a lot like SMH, and I'm sure Nvidia will, potentially continue to go sideways, which makes me not real happy about this trade when I actually need some volatility, which I'm hoping we can still get it. This is a trade out to October 4th, so I'm hopefully giving myself enough time to see some volatility, and perhaps Micron with earnings does impact semiconductors a little bit, but Nvidia is what it is, and it's right now $2.84 trillion. If it moves, it moves. Great. If it doesn't, I'm still watching the S&P and I'm watching the Qs. Okay. Yeah, everybody's lined up there. Yeah, Lee says JP speech on Thursday. Yeah, this is kind of a wild week. Like Thursday, this week we have a lot of speakers on Thursday from the Fed. So we get through the Swiss National Bank, which, by the way, is expecting to cut rates this week, which I hope they do. That'll help my overall kind of core positions on a weaker Swiss. If we have some risk appetite, especially all my positions, I'm long Aussie Swiss, long CAD Swiss, long Euro Swiss, long Pound Swiss, long New Zealand Swiss, long Dollar Swiss, and some better than others. But for the most part, I've had that position since early 2023. I've enjoyed a nice positive carry trade through that entire period, and I'll hopefully still enjoy a little bit more carry if they cut rates. And then we have final GDP numbers out of the U.S. on Thursday morning at 8:30, unemployment claims as well. And then, like Lee said, there all of the Fed speakers. I mean, we have Fed member Collins, Kugler, Bowman, Bostic. I took a live squawk feed today from Bostic, and I thought this was interesting. So the recent dots show a fair amount of dispersion in the opinion of the Fed. Labor market has not been driving inflation. There's a lot of uncertainty about where the Fed will cut to. Fed is not in a mad dash to neutral. It's in favor of, I didn't read that one in full, does not expect to see unemployment increase much further. I mean, they're saying that the unemployment rate's going to be around 4.4. I mean, that's only 1/10 of 1% different than what we saw back in July. So that's a pretty bold claim to say that we are going to cut rates and then employment numbers are going to just get so much better. Maybe they do, maybe they don't, but either way. Optimistic about the future of the labor market, not flashing red. Labor market deteriorates. This is a reason for faster pace to neutral, but that's not the baseline. Long run inflation expectations relatively stable. Then we have the neutral rate is around 3% to 3.25%. We saw the 2 years around 3.6. And then we have a pent-up demand, maybe substantially less. We've got the split economy with some having lots of money that are flush and then others living at their limits. Obviously, we've seen, savings going way, way, way down. But, that's the economy we're dealing with. So the cut was a big deal. It could be, I mean, we've seen history show that half the time, like over 20 instances, the market ends up higher. We've seen also the last time we cut 50 basis points from 2001, 2007, those 50 basis points cut obviously yielded some pretty nasty results a year after. So I just continue to trade price, be cautiously optimistic, take my potential protection to the downside. But if the market wants to melt up, so be it. That's the easiest thing in the world, is to be, slightly tilted bullish with the market that wants to melt up and go higher. Okay, let's talk some currencies. Let's talk oil, gold, silver. The dollar, you talk about some indecision. I mean, how many of you are aggressively positioned on the dollar? I'm just curious. I look at this level, and I still think that the dollar, if we're going to get weaker, the dollar is probably the best indicator for the overall markets to go higher. If the dollar goes down, everything else looks good. This includes gold and silver and oil, probably Bitcoin. You can throw that in there, Ethereum as well as a peripheral crypto. But if the dollar gets weaker, everything looks better to the upside. That's my opinion. Now, if we stay in this super choppy, noisy zone right here, I don't know what the dollar is going to give us. If the dollar is going to give us a bunch of indecision, then, look, the market can still melt up higher. But if the dollar catches a bid down here and squeezes and goes the opposite way and kind of plays a bit of a contrarian trade-off this multi-year low, then we might see another pullback before we have the market actually go higher. I'm not sure. So I don't necessarily love the idea of selling the dollar immediately on a breakout. What I look for instead is if the dollar wants to break and take out these lows, then any type of pullback here with confirmation, I'm looking to then sell the dollar. So if we break, pause, go a little bit lower, you can sell that flag. If we break, pause, pull back, look to fade that move. But I'd like to see the dollar continue where it started. This high to low, I'm looking for symmetry to be down here, but we're right at those support levels where if we hang in support, I can see support holding, and it's just not quite ready to break. But it's not summer anymore. We're actually almost through September. And if we have Q4, October, November, December, is Q4 going to be everything to the upside, and the dollar's just going to get slapped in the face again? Maybe, possibly. But if the dollar catches bid, I think a pullback prior to the election would make some sense, right? Dollar pulls back here, gives us a bit of a risk-off tone. Then there's the aftermath of whatever happens around the election, good, bad, and different. But we'll see what the market gives us by, maybe get through the election. November, December could be an aggressive couple of months, which means October might not give us direction right away. We might see more of this kind of September chop, and maybe it carries on to October because all we have is a little bit of employment news, a little bit of inflation news, but the Fed's not saying a word until November, and that's 2 days after the U.S. election. So all sorts of interesting stuff. But dollar index is sitting right here at major support. I'm watching that level closely because if we break lower, I would like to participate. And even if I don't participate with dollar weakness, I don't express that in currency trading. Anything to the upside here is how I'll be making money on a weaker dollar. So that's one way to do it. Okay. All right. Dollar stuff. Let's go to U.S. oil. Oil has bounced off nicely off the 65 and change lows. I did take profit on that 65.5 level. Let me make sure. Let me see if I have any other CL positions running. So right now, CL 65 by 64 by 51. That's showing some profit. I think overall, let me check this overall position. So 65 by 64. That's basically my trap to the downside, and then my overall position that should have given me. I'm pretty much done with this trade in profit. Looks like I collected 24 cents credit, so about $240. Well, actually, no, it's about $480. Let me see if I put in a similar trade. So the credit on this, about $240. Yeah, so I think I'm going to go ahead and protect this trade and just take the profit, because right now the efficiency is, if I were to sit here and wait with this bounce that we just saw, if I take this position, which I collected 24 cents credit on multiple contracts here, right now it's trading for about 5 cents. For me to sit here and wait for another several months to get an extra 4 cents of decay is not worth it when I can just take the profit right now. And so instead of making about $480, I will make probably 300 and what is it? I guess $380. So instead of making 480, I'll make 390 or 380. I'm okay with that, because for me to sit on this for the next 3 or 4 months is not worth that buying power reduction. It's not worth waiting for that potential outlier risk. So I'm going to go ahead and protect this right now. So I'll take 1, 2, 3, 4, and look if I can close this at a. It's showing 5 cent credit, which I think is interesting. If I can somehow close that for credit, that'd be even better. That'd be 29 cents. But the debit showing here at 4 cents ass. Let me see if I can get like a 0.01 cent credit and just make this break even. Let's see what this gives me. Okay, so I closed for a 24 cents credit, which also closed for an additional 3 cents. So I actually netted 27 cents on that trade, which at 2, it's 27 cents. 27 cents times 2 times 100. So, times 1,000. So $540 on that trade. I'm gonna do the same thing here. 1, 2, 3, 4 for 24 cents credit. I'm gonna try to sneak out another. Can I sneak out like an extra 5 cents credit, 3 cents credit? So that's 27 cents credit. Good. All right, just give me about 60 seconds. Let me close up these positions here. Close. 0.03 credit. Filled. Okay, so that's 27 cents net. I'm liking that. And that's way better than hanging on to it for the remainder of the period here. That's an IRA account, didn't have that trade. This one has it. Same thing here. Let's go 3 cents credit. Very nice. And
Hey,
I hear Frank. What's up, dude? How are you?
pretty good. How was your weekend?
Weekend was good, man. Went by super fast, but it was good. So, all right, I'm done on that CL trade. We took some profit here on CL as well. I have a 65 by 55. I would like to check on those. I'm just doing some profit management here, Frank. Whatever you got, just kick it around. I'm just going to start looking at maybe protecting some. I had oil in at the lows with the futures market for CL. I did a 65 by 55 or 65 by 64. So I'm looking to take some profit. If it's mostly, if I'm like 80, 85, 90% of that profit is in my hands, I can take it now. I'm just going to go ahead and take it and protect it. So that's where I'm sitting here. So these are done. I'm looking for CLZ.
So you said you're trying to trail out of oil?
Not trail out. I'm just trying to close it. So I did a 65 by 55 for 50 cents. I collected 50 cents, and right now this is trading for 89 cents. So I'm not going to close out of that one yet. Okay, that one's fine. So I'll let that one marinate a little bit longer. But the other one I closed out for, it was like a combo, like credit spread, whatever. I'm closing out, end up grabbing about 27 net cents, which is good. And then this one, I'm trying to grab another net. This was November 15th. I have a 1x2. This should be a credit. Oh, there it is. 65 by 55, 61 cents. Okay, so I'm upside down about 20 cents on this one. But I'll let that one just hang out. I've got another couple of months. Hopefully oil demand is up and we'll continue to see oil rally, or at least stay off this support zone. So I still like oil to the upside, at least in the near term. Gold continues to do virtually everything right and nothing wrong. There's not even been a pullback recently other than this little pause we saw around early to mid-September. I'm just letting gold profits continue to rally. I'm not doing anything. I'm not adding anything. Not yet. I want to see a dip or pullback before I take another action on gold, but no complaints if it's going up. I'm just not buying highs. I'm waiting for some type of pullback. And then silver. Silver has paused, but I'm looking to see if silver will continue to play catch up. My first target on silver is 35.90 or 35.85. Bitcoin, I'm bullish. Last week they announced with IBIT that the BlackRock spot ETF is going to allow you to trade options around that, which I think is pretty good. I do have some exposure on BITO.
Oh, really?
Yeah. So this is a big deal, man. I like this a lot. Now, my plan is if and when I can trade IBIT with options. I'm not sure when they actually allow you to do it. But if I go into trading right now, let's go positions, table. So it says there's no options available. But whenever IBIT has options, what I'm probably going to be doing is working for some active cost basis lowering. So I just want to, I know my break even on IBIT is, let me check this here. So my tracker, so my ownership positions, IBIT. So right now, let me see if I've got a break even here. So I've got a buy at 31.50 and a buy at 28.50. So those should be equal weighted. So if I go 28.50, 31.50 and 28.50. So my break, 897.75. What did I do? 31.50 plus 28.50. There we go. Divided by 2. Okay. So my break even on IBIT is $30 there. So my break even is $30. So what I'm saying is if we continue to see, $30 is my break even. I don't plan on going out super far, Frank, just in case, Bitcoin does get a run. But what I can do is I could probably sell like a 5 or 10 delta call and just lower the cost basis every maybe 20 to 30 days. And so if my break even is 30 and I can grab, let's say 20 cents, well, it lowers my cost basis by 20 cents. And I do it again, same, I'll just kind of monitor price here. But if I can lower my cost basis, let's say 20 to 30 cents every cycle that I do a covered call, I mean, it helps me increase the bottom line. What I'm trying to avoid is if I cover it and then Bitcoin rips, well, then I'm going to be, covering and rolling and trying to get out of the way. I want to roll it out in time, up in price. And there's only so many times you can do that before the broker's like, if it's run too far, then you're going to do it for a debit. And I don't love rolling credit covered calls for debits. I try to, get paid to roll them. So I'm trying not to get super aggressive on covering IBIT, but I still think that's great. I think it's good news for us to be able to trade more than just, buying an ETF. Instead, you can actually trade options around it. So that was news that broke last week. So keep an eye on that.
Well, I still have my long vertical on BITO.
Long vertical on B. Okay,
that's looking
good.
A little better today. I had it at I bought a call at 20, sold a call at 29. So that's a 9-point move. I paid $1.80 for it. So I think the max profit would be $720 by March, if that works out.
Yep.
I did the same thing on Ethereum and somehow got the same debit for it. So I also paid $1.80 on that.
Okay.
Except the numbers for there, it's a $5 and a $15 call on ETHU. Which is
okay. You're trading a double X. That's a 2X leverage ETF. Okay, got it.
So I mean, it's still the same amount of risk.
Sure.
I don't know if I would outright buy this because of double leverage. It's already a leveraged product.
Mm-hmm.
Like it's basically kind of like buying the stock market, but even worse in terms of volatility. So.
Yep.
I mean, I figured having a $1.80 credit to go out several months into next year is probably not a bad call. Yeah, especially with the idea that interest rates were going to be cut, seeing 50 basis points this meeting and then expected to be like, I think they're expecting like 100 at the end of the year. So maybe another 50 by December. So devaluing of the dollar. I like this play because gold is out of reach and crypto is it's been churning lower the past several months. So I'm happy with, my positions on crypto.
Sure.
I'm looking at indices as well. I think I'm just going to try to trade range within, intraday range. So we saw, today hasn't moved too much, so I'm looking at selling credit spreads. I'm trying to get 57.40 today, hopefully above $1 credit. So if we keep running higher, I think I'm going to look for credit spread there.
Okay.
But if not, I'm trying not to get impatient and hop in a trade. But
sure.
That's kind of where I'm at now.
No, that makes sense. Yeah, this, I mean, at least today, price is really muted. I am probably going to be taking some, you and I talked about the broken wing butterflies that a lot of times I'm looking at position like, broken wing up here, broken wing down here. I'm just going to start looking at kind of doing more at the money and just see if price wants to drift a little bit higher. Not necessarily for the profit trap, but for the the income, but also the profit trap is kind of the kicker. So if I get, let's say 50 cents and I also can, go like 5X that, if I get a profit trap by the end of the day, I'll probably set these like 0 and 1 days to expiration, like broken wings that I think for right now, I'm going to tilt to the bullish side. I'm just going to tilt to the bullish side simply because as much as I want to see a pullback, I think the market is so high on its own, its own optimism that sentiment is carrying it higher. I know that we might struggle to melt up significantly higher, but I just feel like the disappointment would have to be something like, I don't know. I mean, if somehow Powell completely contradicts himself on Thursday with 10 Fed speakers lined up, maybe that's a reaction. But otherwise, it's going to be news. And we have, earnings season kicking off here. We go through the final week of trading through this week, the 27th. We end the quarter, end the month on Monday, the 30th. And then earnings season is going to kick off with financials. We have non-farm payroll on the 4th. So until, I don't know, I mean, either the market's going to melt up prior to the news and it doesn't really react until news actually tells it to, or we don't have any type of reaction until news actually hits the headlines. And that's a big, it's, I don't know. I mean, we could see the market just keep running and keep melting up higher, or we can see the market's like, okay, we're sitting here at all-time highs, but justify it. This is the market asking for maybe data to continue to come in better and show that employment is looking better, unemployment rate is steady or even getting lower. I think that would be a big reaction to like a non-farm payroll announcement on the 4th. And then earnings season, if we kick off with financials, which has been the second or third best performing sector of the year, 21.44 in financial sector. That's pretty good overall. Actually, let me see. Did JPM recover from that 7.5% sell-off? Not quite. So JPM putting in some highs. I think Costco has earnings coming up. Maybe Costco has earnings, Costco has earnings coming up here this week on the 24th or the 26th. So that is Thursday after market. This is going to be about a $40 move. The only issue with Costco is they're probably $5 wide spreads. So if I go to the 27th, they're $5 wide until you get a little bit further out. I mean, on the call side, you can see they're $5 wide. On the put side, they end up going a 250 wide. But the issue is it's much wider. Implied volatility this week around $35. If I went out a week out to the 4th, I'm just wondering what would it cost me to take a trade here. The expected move. Let's price this one out, Frank. If you're interested, I'm interested, so I want to price it out. If you don't mind looking at it.
For
Costco.
Talking about Costco's earnings.
Yeah, Costco. Yep. So Costco earnings this week.
I kind of like the idea of pricing it out and then selling the iron condor.
Pricing it out, selling the iron condor. Okay. All right. Let me get logged in here.
Because I feel like you can collect more premium. I think the payout would be better if you bet on the stock not moving as far as we think. I feel like that tends to happen early on. Maybe the price changes, becomes more expensive.
Yeah. I would rather see, a really simple one would be just to buy a credit spread and make it dirt cheap. And if it goes up, it's a full credit spread for profit. If it goes down, you take a managed risk. But is there any reason for Costco right now to be bad? Every time I've ever gone to a Costco, anybody I've ever heard go to a Costco, it's always busy. That's it. I love Kirkland's signature, blah, blah, blah. I love Costco. It's I hate going to the store now because I'd rather just buy stuff online and not impulse buy with crap that I don't need. So anyway, here is where I'm at. We have earnings on Thursday. We have an average move of around 4.5%, which I think is fairly safe. 4.3, 4.1, 4.5, 3, 3, 4, 3.5, 4, and 5. I would even say 4% is probably a bit safer. So the stock's trading at 916. Let's do a 4% move on 916. We're looking at about a $36 move. Tasty's implied volatility has it around a $41 move. I'd like to sell options if I can, or just keep it really simple and just do a credit spread on it. So either way, how many times do we hit at least 4% post earnings? I'd like to see it over 5, 5 out of the last 10, but let's find out. So how many times will go out 8 days? This one didn't get the job done. This one does. This one does. This one does not. This one does. This one does not. This one does on day 8, which is my least favorite. I'm going to cross that one off. This one does. This one does not. And this one does not. So we're 4 out of 10. So 4 times we hit the expected move of 4%, which to your 4%. Strategy, Frank. Yeah. So the 4% is the expected move. I'm being conservative, but only 4 times out of the last 10 do we actually hit that move or beyond it. So I think for your idea of selling options or selling premium would probably be a good thing. So I wonder on the.
So if you buy a put at 865 and sell a put at 870, so that's your downside legs, and then you buy a call at 950, sell a call at 955, you sell this iron condor, it's trading at $1.67. So the risk would be that minus, or 5 minus that amount. So the max loss is 333. So the payout would be greater.
What are your puts again? You're
puts,
buying
you
what
said?
put? Yeah. Yeah. What puts did you buy? 865 or 860?
Buying 865.
Okay. And then selling 860. 870.
Yeah.
Okay. So you're doing a bull put spread. And then did you say buying the 950 and selling the 955?
Selling the 950, buying the 955.
Yeah. Okay. So that iron condor. So you get $2 credit. From what I'm seeing, $2 credit, risking $3. Probability of profit, that would be about a $40 move there. Actually, less than that. It'd be about a $35 move. We're anticipating a $36 move. What you want to see is basically price stay where it is. So you're given all this space. Let me see my colors here. You're given all this space. If price just stays within this range, you're grabbing profit. So basically, if you get a muted reaction, your $2 credit probably decays quickly down to maybe $1. Take your 50%, take profit, and move on. That's not a bad trade.
I think that. So when is earnings? Is it?
It's Thursday after market. So you can set it up. So if you did it for the let me go out to the 27th here. So you'd have essentially 1 day reaction. If you do what you said there, you sell the let me get rid of this. So you sell the 950, buy the 955.
Do you think premium would uphold up until then? Like, you think it would still trade at $1.80? Like it is now?
Well, if it comes out quiet, you're essentially trading a 0 DT environment on Friday. So the decay would be very fast. You can easily grab like 25-50% of that profit probably within the first hour or two of trading on Friday. The issue would be if the trade is neutral going into earnings, and then it actually opens up here and it's like pushing higher, threatening your bear call spread. Then it's going to be like you kind of establish that as the line in the sand. You need price to just stay where it is, and it's going to take all day for that to look better. Or if it fades, it immediately looks better. So best case scenario.
I'll probably wait till Thursday just because price could move all the way up to here or something by then, and then that whole range is kind of messed up. But I would probably need to do it Thursday before the bell, so I could close out Friday morning, because unlike SPX,
right,
they will probably count it as a day trade, because they'll probably close it out for me before the day ends, just to minimize the risk of getting assigned. Okay. So I might do it the night before, but we'll see. I think I like doing being range bound on S&P for now.
Sure.
Selling options has been much better than betting on volatility.
I agree. I'm looking at let me see if I did an equidistant. So if I did a 915, I sell. We're expecting to see. I said a 4% move. So 0.04 times 916. We're looking at about a $36 move. If I sell 40 above, and this would be 875, 40 below there. I mean, I'm not going to take this trade, but for a $27 debit, I'm getting what's expected to be like a $30 to $36 move. That's an expensive way to trade it, but if you've got the capital, you're not risking, you're not really risking $2,700. That's just what it takes to get the trade up front. The only way this trade shows like, oh my gosh, I'm going to lose so much, is if price literally after earnings is nowhere. But if we have a gap higher, gap lower, what you're looking to do is, do we at least get a $27 move on Costco with an implied 36 as the expected move? Now, going out a day is a lot different than going out a week, because as I showed you, you've got like day 1, day 2, day 3, day 4, day 5, day 8, because that's over a weekend. Sometimes it takes the entire time in order to make that 4% move as expected. So anyway, just a couple ways to look at it, but I think selling would be better. And an easy way to trade it too would be like, you know what? I think Costco is going to have solid earnings print. One way you can do it and forget about all the calculations is we're trading at 915 right now. I sell the 915. and I buy the 910 and I get $2.35, and price, all it needs to do by Friday is be above it. If price is above it by Friday, I'll keep that full credit, and I'm risking about 1-to-1. And that way price can go, up to infinity, down to infinity. If I lose, I lose 265 per contract. If I win, I win, 235 per contract. So that's not a bad play.
You could also do the what's it called, broken wing butterfly, but you're buying a broken wing butterfly put spread. So like you're buying puts out of the money or deep in the money.
Yeah, so you do something like this. So go up to the top end of the expected move. So you're getting like a 945, 950, and then do.
Yeah, so I'm at that right now. 945, you buy a put. 955, you sell 2 puts, and then 960, you buy another put. That is right now. It says 502, but I mean, it could go down to like 4 or 3, just moving a lot. So if you could get something like that where you're only risking 1 out of the $5 spread, could be a good idea.
Yeah.
And then doing the same thing to the call side.
Yeah, but what's your dead zone? I mean, you're still playing a game where if price doesn't do anything, that broken wing and that broken wing, I don't know if those are going to be as good as. I mean, a really simple trade is if I sell the 915 and I buy the 910, if price goes up, then I make about $235. That's an easy trade. I mean, I'd like to think that Costco earnings are going to be pretty freaking positive. If they're not, fine, I'll take the risk on the trade. But if they are, I could do that for essentially it's like trading a 0 DTE, because when we have earnings after market Thursday, we only have Friday with price. So unless we see price, number one, if price, drops lower, okay, fine. I mean, here's what I will do. If I take that trade at the money and I get $2.35, okay, and it goes down, then I'm just going to wait for this, and I'll just do a 2 contract trade down here and then take it back up. So if I, lose 265, but then down here at the money, I can gain, $5. I wash this trade, I walk away net profitable, and Costco's an easy win. Obviously, if I take the trade now and price goes higher, by Friday, all I need price to do is not, open higher and just dump for the entire day, which I don't know what
Did you
news
see their
would be.
earnings forecast? It's incredibly high.
Is it? Let me see.
Yeah, their EPS is $5.08.
508
the last
versus
3 quarters have been in the 3s.
Wow. Yeah. That is pretty up there, isn't it?
Heavy expectations to the upside. It seems like a lot of room.
We had a 486
to be wrong.
Back in this would have been September 2023. They were at 486. Hang on a second. Let me see. Let me look at a little fundamentals. Are we the last guest today? I know we went long today, but are we the last guest?
Yeah, we are.
All right. Earnings growing, expected to grow. Insider selling, probably not helping. Like bigger picture, we're trading at a 51 times price to earnings, 1.6 price to sales. Fair value says 540. This stock is 67% overvalued. Doesn't mean anything, but Costco compared to Walmart, compared to Target, Dollar General, which got beat up like crazy, BJ's Wholesale Club. This is kind of interesting. Right in here. I mean, actually, you know what I'm going to do, man? I'm going to do. I got a trade right here. Here's what I'm going to do on Costco. I'm going to go up to the expected move, put in a bear call spread out to I'm going to sell the 950 by 955. I'm not going to take it for $1. Okay. I'm going to take this out to, let's see. If I sell the 950 by 950, that only gives me 1 day to manage the trade. I need to see price like hit and fade. What I'm going to try to get filled on is if we had a $40 move, that puts us up around 55. Let's see here. Those deltas, I'm going to put this way up here, dude. So I'm going to try to get like a 16 delta 965 by 970. We'd have to have a big bullish reaction here. I'm going to try to get filled for 250 on this spread. And I'm looking for price to go way up in price if it does, and I'm looking to fade that back down. So I'm going to take a trade where it's like a 1-to-1. So if I get filled, I'm asking to get filled at 250. I will watch this. If it offers up like $1.50 to $2, post earnings, I might take the trade. But I'm just going to put it in as is, well outside the expected move, well above what I'm calculating for earnings. And most of the time, it looks like earnings just fall within the range. So this trade is unlikely going to get filled, but if it is, I'm pretty confident that I'm putting in a decent level, getting filled at a 1-to-1, and looking at price to see if it will fade a little bit over the coming days. So if I put in this trade, that's a 1 DTE, or a 0 rather, because I take the trade, but I'm not getting filled in this until it actually hits my ask at 250. But anyway, that's what I'm going to do. So 250. So this is a 965 sell call, 970 buy call. Creates a $5 wide spread, trying to get filled for 250 credit, and I'll let that one sit and marinate for the week, and then we won't know this until maybe it gets filled like Thursday, Friday if there's some type of move, but I doubt it's going to get filled immediately. I'll just wait and see. And like from my end, I'm going to monitor and modify the trade to see if I like something better. But looking at the overvalued, fundamentals, I'm not saying that Costco can't go higher. But what we're likely going towards is at some point, this is going to be a split. I wouldn't be surprised if they do a 10-for-1 split, and all of a sudden Costco is trading at $100 instead of $900. Or $90 instead of $100. So, in fact, that might actually happen. Maybe with this earnings report, if it comes in solid, they might actually do a 10-for-1 split. They might do a buyback as well. So, anyway, I know that from the Costco member side, I think this is a company that pretty much wants like full loyalty and patronage, like through and through. And most people are like very loyal to Costco, and they freaking love it. So I think if it offered a split, I think there's going to be a lot of order flow that would come back into it. So anyway, I certainly like to own it, at a 10-for-1 split, just offers it up where it's like, yeah, I'll take some exposure. But anyway, all right, I'm going to put that trade in. 9. Where'd that go? There we go. 965 by 970 pending. Make sure that is pending. Yep. So there. All right. So that trade is in. I'm going to throw that in our Discord. So that's going to be under stock options trade. Costco 9/27 expiration. Sell the 965 call.
I really don't see how Costco could miss.
I don't think so. I mean, I don't see it missing either. It's just a matter of if it does beat expectations, it's like, does it push a crazy amount higher? I mean, and if it does it actually like push there and stay there for the day, or is it like, push up and then it gets faded immediately like that day on Friday? So that's kind of what I'm putting in, is I see that they could, hit expectations, make a big $30, $40 move to the upside. But if that gets faded a little bit to fill the gap, that's all I'm really trying to time for Friday. Pending.
Yeah, I mean,
Costco earnings Thursday after market.
I think if they, at least for the rest of this week, the move might not be severe. But if you look at the past, like, earnings reports, they've all just, over the span of a month or two, have just gone up significantly. So I'm even wondering, what if you took like a vertical spread or some way out of the money call for like a longer term expiration?
I'd rather wait for a split.
Just seeing the gradual.
I mean, if you're going to buy it
for a split.
Yeah, I mean, how far out of the money you want to go on $1,000 stock? I mean, I guess it's not the end of the world, but it's like if I went out and did a leap for $1, I mean, that's fine. But this thing has been on a rip.
$80 move in 1 month, or less than one. Well, let me see. This was June.
From that August 5th low, right?
From
August 5th low to now,
so
it's gone up 17%, $130 in the last month and a half.
So if you go out till November and say you get like $1,000 call, I don't know. I'm trying to see what that would look like.
Well, I can show you the
November
probability
15th,
of that trade is probably low. November 15th.
It's
upside, I see
it's
$9.
$9.
Yeah, so I see about a $73 move expected for November 15th. If it goes straight up, we're getting towards 985 to 990. If you bought the $1,000 call, so are you saying buying like $1,000 call for November 15th?
Yeah.
Okay, it's going to cost you $1,000. So it's a $10 debit, which means your break even's over $1,000 at 1010. It's another that's a 20 delta. Like, it could be tested for sure, but I think your best trade there would be if you did this trade as an example. If you went out right now and bought the let's say the $1,000 call for the 11:15 expiration. If price shoots up with earnings, that is going to shift this delta to maybe a 30 delta ish. I would just take the profit right away. I wouldn't even try to get this trade to have to go to $1,000, because if it does, especially if it takes longer to do that, you're just going to see that time decay go against you, right? So if we had an immediate bullish reaction, that's not a bad trade.
Look at October 4th then. That would be a $240 call for 1,000 strike price.
Yeah, you're right.
And if we do the same thing, you're talking about that initial reaction,
yep,
you'd be paying far less. And then if the delta does change in your favor, you could maybe be looking at like $5 to $7.
I can roughly calculate it right here. So if we had, let's say we hit the top end of the expected move, which is going to be around let's say 950 ish, because about $35 expected, so 950. We go up $35, and we're trading at a 9 delta. So if we go up $35 at a 9 delta, you can add about $3.15 to a 2.44 call. If you get out of that trade for $5 or better, Frank, you're turning that into a pretty nice win. You're getting well over 100% return on capital. That would be if we take that, it's a $244 risk. If price goes down with the earnings report, then you're toast on that trade. But if price goes up, $20, $30, you can turn this 240 debit into probably, I would say, $5 or better. And that's not a bad play. So trading earnings out of the money, the delta shifts. I mean, that's about accurate, where you could probably see this trading for like a 5 to 550 call. And that would give you a nice little return. Let's say it trades for $5. You're getting 100% return on capital. 550 minus 2.47. You get 122% return on capital. So that's a good play. That's banking on like a decent $30, $35, $40 move to the upside, which expected to give us a $40 move based on earnings this week. And I think going out to the 4th is good, so you have a little time in it. Because immediately, if you did a September 27th, that's a terrible trade. But you'd want to see that immediate reaction, have a little bit of time premium in there, and see those deltas shift in a big way where you can probably grab a nice chunk of profit. So, dude, I think hypothetically, I like that trade. I'm not going to take that one. I'm just going to keep my credit spread because I'm looking to sell it up here. But I like that trade. If we did a 10-4 expiration, we said a $1,000 long call. And that's let's say 245 to 250 debit. So I want to track that one. And then I have my 965 by 970 bear call spread for 250 credit. And that one's pending.
And if you were to take it now and have price continue to, just make these 1% moves higher up until earnings, you probably even just get out before then.
Yeah, if price was going to, it has to move. If price doesn't move, then you're going to see your value go sideways. But if price does go a little, today, for example, we're out of the gates here. That's a decent move. 900 to 916, you got a $15 move. That's not bad, So, if we have another $5 to $10 upside, you could probably see a 25 to 50% take profit before even earnings on Thursday. But if it stalls, then you're looking for essentially earnings to give you the full move for the earnings play. So I like that one, dude. I'm gonna kind of just track that one for education purposes. But yeah, I think that's a good play. It's not expensive. Yeah, not expensive. But I mean, for a long-term play on Costco, I mean, I've owned Costco since, I'm trying to think when I became a member. It would have been back in like maybe 2017. I mean, I've had some exposure in Costco for a while. I started to get way heavier involved in like COVID when I just like bought everything I possibly could. But once we made like a triple bagger run from, dips at 400, we went up to like 750. I didn't quite take the 100% there, but other than that, I've been just trading options on Costco. So it's been a great run. I'd like to see either a 10-for-1 split, which I don't know if that's going to happen, but I wouldn't be surprised if it does. I mean, heck, if Chipotle can split, I think Costco can split. If Apple splits and Amazon splits, I think Costco can split. So, anywho, yeah, good stuff, man. All right, anything else? I'm going to get this finished and typed out here. This is a pending out of the money bear call spread. So
all I can say is
price.
Waiting on gold. Hopefully gold will come down and let me buy it.
Yeah.
That's what I'm looking for. I kind of regret selling my GDX because although it's not, it's not completely correlated to the gold market, it's the gold miners still did very well. So I missed out on the rest of that gold run.
Okay.
What else? I think I look at NVIDIA a lot and just think of it as like the S&P or the NASDAQ, just because when it's muted like this, it's down 0.63%. The S&P is really not doing anything. And you look at the other days when the stock's just running higher, you see NVIDIA is up like 2 to 7%. So
right.
I don't know. That's a good gauge on just trying to figure out whether or not we're going to see moves or if the range is smaller than we think. So that's kind of what I'm using to help gauge selling these credit spreads. I also saw this morning. We have the yield curve even higher today. It's up 28%.
Yep.
We're at 0.18. And we started, let's see, what was last week? Last week was like in the single digits, now in the double digits. So, I mean, it's steepening.
Mm-hmm.
And I know, maybe conventional indicators can be thrown out the window now, but I feel like if this has been the number one indicator of recession, what is it saying to us now? Like, should we be blindly bullish?
I really don't think
if you are, it works out.
I really don't think that anybody knows what the future holds. Because I don't know how many lessons could we look back on and say, well, this has happened, I think this is going to happen. We have 100 different scenarios that could play out right now. The big uh-ohs and the big red flags would be that we had an inverted yield curve for the longest period ever to now a disinverted yield curve that continues to steepen and become more and more disinverted. That's, and again, we're only talking about, back 20 years, back 30 years, where we had these terrible events like 2000 dot-com bubble, great financial crisis, COVID. All those were like, yep, that's what's going to happen. But we also have this like weird transit, we keep calling it like transitory recession, where like things have experienced downturns all at different times. The market breadth has been up. The Fed is cutting. There's literally it's a 50-50 shot, dude. I mean, the cutting by 50 basis points has shown in the past when we cut in 2001 and 2007, that clearly was not enough to, tame the employment situation, and everything started to skyrocket and the economy went into the crapper for, a recession. But right now we're sitting at like off of all-time lows. We're not at all-time lows because we've seen the Sommerl trigger for July. But we're sitting near like these historically low unemployment numbers for the last like 40, 50 years. So I'm not saying that it's a good thing to see the trends change and all of a sudden we're having a softer labor market, but it doesn't look the same. as what it was during great financial crisis. Also, household wealth, company margins, profits, like it's different. So I don't know. I mean, I wouldn't be surprised if this actually starts to turn south, just to see if employment does get better. I think this actually turns south a little bit more than just like ripping straight up. So, and just because I say that, the correlation has been, this was the tightest labor market we've had in a long time, and now we're starting to see the loosening of that tight labor market. So that's my concern, is the more this goes up, the worse our job numbers are actually getting, the worse our labor market's actually getting, and the reality that at some point will start to weigh on everything. It'll weigh on prices. And at the end of the day, we sit here and we, predict and we forecast. Look, the market is going to tell us when things are bad, and what we have to think about is, if it starts to price out that things are getting worse and things start to go red, all you can do is you wonder, okay, is this a buy the dip, or is this there's no stopping it from the downside and we have a bigger, steeper, nastier correction? Nobody knows. But everyone that's been planning for a bear market for the last 4 years has been getting their butt kicked. And so eventually they might get proven right. But I don't think that's now. The only thing, and again, outlier risk, in my opinion, is something that we're not even talking about yet. And I don't know what that is. Obviously, if I knew what it was, we talk about it. But something we're not even talking about. Maybe it's a war. Maybe it's some crazy amounts of geopolitical tension. Maybe it's the dollar maybe the U.S. has a failed bond auction. We've been freaking offering short-term treasuries like every week, and maybe we have like a failed auction, and the market reacts to that because the bond market is supposed to be the smartest market in the world. That's one thing. But until price shows us, I want to look at. Yeah. So that there's things like that could happen and quickly turn price. But at the end of the day, it's price that's going to tell us, okay, we need to be a bit more cautious. Right now, price is not suggesting anything outside of like, if you're holding, you're holding. If it melts up higher, everything's great. But if price turns to the downside, I do believe that whatever risk we do have out there, it is going to come violently. So, I mean, this drop in July to August was violent. If it happens again, it's violent. I wouldn't expect it to be like, oh, just a little tiny correction. It's like, we're probably going to have like a 1 day, 3, 4, 5% sell-off. And then everyone's going to panic. And then the market's either going to buy the dip again and we're recovering all over, or it actually gets worse. That's the big outlier that I don't know. And so for that, I'm like cautiously bullish. I'm protecting. I've got some hedges. I'm trying to make my hedges cost effective, where now I'm actually taking like broken wing butterfly hedges where they're credits. And if I get paid, cool, I keep it. If I'm wrong, I lose way less on the risk side than I get on reward. So that's all I'm thinking about right now. But I think whatever.
Well, I have a question.
Yeah, go ahead.
About bonds.
Okay.
So why is TLT dropping as a result of these, rate cuts? Because Treasury bond value has like really declined since the FOMC.
Yeah. Well, the reason they're saying that is because the bond kind of front ran the idea of cutting rates. And so the bonds were ahead of it with the rates dropping, right? So the Fed's going to be cutting rates. The bond market started to price that in. And so now the bond market is being said that like, oh, there's stability here. It's already been priced in. So if yields start to go up, that's why your bond prices would go down. So like I'm long TLT. Actually, that was one thing I want to look at today. TLT is at 98. Son of a gun. I need to check and see where if I might just get out of my TLT position. I'm long out to like 2026, but I don't really want to have the exposure here. Like that's a pretty decent pullback. Let me see where I'm at right now on TLT. I might take profit here, dude. And it sucks because I should have been looking a little bit more aggressively at like $100 or better. But let me go TLT. If I've got some profit on this right now, I might just take it and then I can reassess the whole bond situation. So let's go. So I've got a break even of around 13.26. I should be in pretty good shape here. So let's go. Just going to grab an individual count. These should all have the same type of trades on TLT. So TLT, I've got an 82 by 103. Right now it's trading for 1766. Now, right now I'm in for 1326 on the debit side. So 13.26 minus 17.67. I'm up about $441 per contract times 4. I'm up about 4.41 times 400. I'm up about $1,700 per contract. I think right now, Frank, I'm just going to take profit and move on and not worry about the bond drama, because I wanted to see if price, with yields coming down, I wanted to see if price will rally back up and hit my symmetry target, which is right here around 105. But if we drop lower and all of a sudden I'm waiting for like this trend line to get tested, I'm going to lose value on that diagonal spread. So I'm good just taking the profit now. If I looked, I thought about this a lot over the weekend. If I go to my TLT position as a whole, I'm currently up around $12,000. I'm just going to preserve that, as opposed to if I get it called away. Let's go, let's see, 21 minus 13.26, 774 times 400. So I could get $3,000 per account. So it'd be, my max profit would be around like 25 grand. I'm essentially taking about half of that right now, and that way I don't have to worry about it. So I don't know. I could be making a rash decision, but I'm not really confident that the market itself, and this is what, to your question, the bond market was pricing in way early the rate cutting cycle. And if that's happening, we might actually see the 2-year be firm, and the 10-year, they actually talked about the 10-year increasing. If the 10-year increases on the yield, then the 10-year bond price goes down. And I don't know if the 20-year is going to be as affected by that, but obviously we want to see the 20-year yield going down for my TLT to go up. And so to be safe, I'm just going to take the profit and go ahead and get out of this bond position. So I'm not leaving with nothing. There's still some profit there, which I'm fine with. But if I look to close, we try to get 17.55. It's super liquid, which is nice. I should be able to get 17.55 here, and I'm closing out both positions. So it should be 1, 2, close for 17.55. Hopefully, nope. Hopefully 17.50. Yeah, I'm just taking. So I got filled at 17.52. All right, I'll do the math on the profits here in a moment, but I'm just going to take the profits. So 17.50. Oops, let's go 55. I'll go 17.50. Oh my gosh, come on. 17.50, 49. All right, let me finesse this down by the pennies. Can't fill. That's annoying. 1, 2. All right, got filled at 17.52 there. That was weird. All right, so I'm just gonna knock these out for the accounts that have that exposure. And what else you got, man? I'm gonna just take profit on TLT. I'll do the math here, like I said, in just a second. 17.51.
Why not just buy, like, say, the bond ETF for short-term treasuries? So 1 to 3 years. I'm trying to find a ETF for that, and I see SHI, SHI. So why not just buy the short-term bond ETF when we know that more cuts are coming, and that shorter-term yields are more sensitive to lower interest rates? So it's more likely to see SHI go up over the next several quarters. I don't know. I'm just trying to think about this. So in the long term, I feel like this sort of thing is going to go higher. Also pays a dividend, which is nice.
Yeah.
But you said you were long TLT, right? And then you
correct.
Or you had somewhat of a long position on it.
Yep. It was a diagonal spread. I had the 82 call, and I've been selling against it for like the entire year. I bought bonds back in January. And I've been selling calls like every 30 to 60 days and just like reducing the cost. So I want to say I paid close to like $17 or $18 for the debit, and I've got it down to $13. So my net position there is, so I just closed out. So 82 plus 17.52 is 99.52. Actually, I just do this. So 17.52 minus 13.26 is 425 at 400 shares. I just made $1,700 per contract. So yeah, I'm up like 13.6 on the trade. My max profit was around 24,000. I know that's leaving a lot on the table, but like I said, my concern was, and I thought about this a lot on Friday when this thing peaked out here. This is the 17th. This is right before the Fed. But the more, deep digging the research that I've looked into, the 2-year is where the Fed is supposed to be taking rates. So the 2-year sitting at 3.6. The discussion is that the 2-year will continue to stay firm and the Fed just comes down to it. So we go from 5.5 and the Fed's looking at a neutral rate around this 3.5 or 3.6, possibly 3.25. The Fed might shoot past this a little bit. But if the 2-year is firm and the 10-year goes up, that gets that disinverted yield curve even further away, right? If the 2-year stays where it is and the 10-year gets steeper and rallies more, 10-year bonds go down, 20-year bonds go down if the yields obviously go up. So I'm trying to play it safe. I'm just trying to take the profit. I kind of want to sit back and see what bonds give us. I don't know. I mean, they're not something I like to trade a lot of. I mean, the 60-40 portfolio that a lot of traders know, like tried and true, has actually performed really well over the last couple of years. It's up like 20-something% over the last couple of years. The issue is if you had the 60-40 portfolio and you replace the 40 in bonds with gold, you have the exact same performance. And I think if you were to say, what would you rather have right now, U.S. bonds or gold? I would rather have gold. So for me to take that profit and run, I can reallocate to gold, to silver, to other assets where I think it's not necessarily about U.S. bond market. And here's why. Do you remember what happened in the UK in 2023? If I go to the UK, is it UK bonds? I can't remember the symbol. Fudge. I'm looking at. There was dang it. It was like the UK 10-year. Was it this guy? Not the UK 100. UK 10-year. I don't know. This might be it. No. That's 2022. The symbol is, this is the 10-year bond, but something like this happened where their 10-year bond yield like broke and the bond market broke, and then it took the Bank of England to step in. So in the back of my mind, I thought, what if that happened in the U.S.? I don't want to be exposed to bonds if something like that were to happen in the U.S. Everyone argues like, oh, it's super liquid, but what if it isn't? I mean, we saw on August 5th what illiquidity looks like. You can take the S&P, the bond market, you can take the most liquid instruments in the world. If it's a fire exit and everyone's running the same door, there's no liquidity. So I don't know. I'm just trying to limit where I've got profit. I'm going to take it. I can allocate that elsewhere. It just opens up more buying power. So I don't know. I think it's partly because I don't know what the bond market's going to do. If we have a positive drift, I'm much more inclined to think that stocks, indexes drift higher. Bond market, I have no idea. It makes sense. It should go higher. Like bonds themselves should go up as yields drop. But what if the yields have dropped so much, Frank, that it's already priced in, right? And then we have, okay, the bond already made that rip to the downside. The yields dropped enough, and then the bonds start to go back up. If yields go up, bond prices go down. That doesn't help my long position on TLT. So that's what I'm doing. That makes sense? Throw this out. Like I'd rather trade gold, to be honest. I'd rather wait for a dip on gold than get back into bonds again for right now.
Gold is going to be a tricky one, though, in my opinion.
Yeah, to what degree? Like, I mean, do you see gold crashing, or it just runs away from us?
No, I don't. So, like, seeing a 1% to 2% pullback, 3% rather, seems highly unlikely. But
yeah,
it's kind of what I'm hoping for.
But if you have, I mean, here's one way you can look at it. I mean, if you have zero exposure in gold, if I had like $1,000 to put into gold, I would take 300, 300, 300. Or 300, 300, 400, make my $1,000 and just give me something where it's like, I'm not going to put all in on one spot, but let's say you take a third, you take a third, you take a third. dollar cost average. At least you're starting something here, and then you're willing to say, look, I'm not just going to buy the highs. But I get it. Like, it seems like gold feels like it's running away from us, but I'm just not going to take the bait, man. I mean, maybe gold has to go up and get like capitulation type move, and it looks like, oh my God, gold's broken. Well, if we have a pullback, I'll still treat that like we can go back and retest the high. So if nothing happens, I already have exposure on gold, and I have for a while. So this is not a bad thing. I'm just waiting, but I want to add more to it. I'm, a little bit impatient, I suppose, because I'd like to add to it, and I just add at highs. So I'm hoping that we have some type of pullback here, which is why we keep talking about maybe the dollar, jumps for a little bit of a risk off tone or some type of bid on the dollar. But I don't know what's going to cause that. I don't know what the dollar, why does anybody want to own the dollar right now? It's been in a downtrend for 3-4 months. I think the stock market gains to the upside still hinge on a dollar that's got to get weaker. We're in this conversation that seems to get more and more serious every year about people trying to move away from the dollar as world reserve currency. And not that it's going to be dethroned or it's going to take time to do that, but even if it's more commodity-based economy, even if it's more gold as a balance sheet hedge instead of having U.S. debt. But I don't know. So point is, if I knew the bond market more, I would trade it more. But I think my position on TLT was one little position. I just moved the needle about 1% for everybody's account. No big deal. It's not a big deal. But I'd rather take that now thinking that I've got it locked in and there's still time left in my trade. Get it off the table. It's over the 50% take profit. So I'll take it, whatever. And then if I like bonds again, I'll reestablish another position. It's not that hard. But I just think right now, seeing that we've already priced in these aggressive yields and they've dropped so severely, if I don't see yields really budging, that's kind of my concern, is that yields don't want to move because they already did, right? I mean, the 3-month has been going aggressively lower, but all I'm doing in my 3-month is trading something in my Roth IRA that's probably just getting less and less yield every 3 months now, which is annoying. And then the 2-year drops from 5.26 all the way down to 3.6. This is way ahead. I mean, remember, this is where the Fed was, 5.25 to 5.5. So this has dropped. Is this about where it's going to stay? I mean, why would the 2-year go much lower? I don't know. I feel like the bond market already made the move, or at least the yield market already made the move.
Well, if that's the case, then gold might be limited to the upside.
It could be. It could be, but central banks are also buying gold like crazy. Maybe it's not the U.S., but China is. Other central banks are. Gold is getting added in a big way. I would say gold is probably a more attractive hold right now than U.S. debt. So, I mean, like I said, this has been, gold is outperforming the entire index this year. There's clearly demand for it. And I think when it moves and we get these like pretty momentous trends, they tend to stick around for a while. And nobody knows how high gold is going to go. I mean, if things get really nasty, is gold going to rip up to 3,000 plus? Sure, maybe. I would take gold going to 3,000 before I take the TLT going back to like 115 or 120. Thoughts? I mean, if you were to say right now at a clean slate, okay, so we have a turtle, call it gold. We have a turtle, call it bonds. Which one do you think is going to outperform? I would take gold.
I guess gold's just going to move harder regardless. So
yeah, I think so too.
If it does outperform, then it's going to, or if it does go higher and bonds go higher, gold is likely going to outperform. So I choose gold.
Yep, and I'm the same way. I take my chances on gold outperforming for sure.
But I'm just going to be patient on it. And
yep.
I don't know. Is there anything else you wanted to add for today?
I don't think so. I think I'm pretty good. That was good session. I mean, P&L's up for the day. Took some profit this morning on SPX. Looks like the ES trade is going to work out pretty nicely as well. And from there, tomorrow's a new day, and just keep monitoring stuff. Got some vol positions I'll be watching. I might dive a little bit deeper into earnings this week. So if I go to Earnings Whisper, earnings calendar. Let me go to the website here. I'm just going to check. There's one website that I keep looking for. I don't want Monday. I want to see like the whole calendar. Let's go to the month. Man, do you need to buy this crap? All right, let's go to stock twits. One more thing. We'll go stock twits. And go to earnings this week. So if I go to earnings, so we have 4, 7, 9, 11. We don't have a huge number of earnings, so mostly the notables are going to be here on the screen already. So Micron is Wednesday, and Costco is Wednesday. That's about all I see would be of interest this week. Costco, I put on the trade that 965 by 970. Micron, I don't know, probably the same thing as maybe a one-time credit spread. It's been underperforming compared to other semis. NVIDIA's pretty much the exact same as SOXX and SMH. But if I go to tomorrow, I don't see anything that I really am interested in here. If I go to Wednesday, Micron's actually after bell Wednesday. Let's see here. Nothing really that I like there. BlackBerry, if anybody's interested in trading a 30-year-old phone, just kidding. Costco is after bell Thursday. Accenture, if that's an insurance, then that's another thing I'm annoyed with how bullish Progressive and insurance companies are. Healthcare's been pretty solid. I've got J&J, but that's not an earnings play. That's just I'm just long healthcare. That's about it. Yeah. So it's light on the earnings side. I think I like your approach with kind of daily plays on SPX or NDX. I mean, I might look at something like that as well. Just kind of throwing a few trades out there to grab some income this week, and we'll come back and do it again tomorrow.
Yeah, I'm trying to be patient about it, but by midday, which is pretty close to now, if we're not, breaking this 57.30s on SPX, I'm probably gonna look to sell some credit spreads there.
Okay.
But, yeah.
Cool. Before you go, let me go SPX. Yep. Just before you go SPX, I want to make sure I don't have some like crazy gamma level out there you need to pay attention to. I see one up here at 57.50, but again, looking at the high from Thursday last week, it's right here. So yeah, if we just kind of melt up there, I would just look to see does price respond to that high, and if it does, that's a good credit spread for the day. Yeah. Otherwise, it's melt up city. So cool. All right, dude. I'll let you go. Thanks, man. That was fun. Thanks for going long. I know you love it so much.
Yeah.
All right.
Big fan of the long streams.
For sure.
Yeah, we'll pick this up tomorrow.
All right, cool. See you, everybody.
We have a good trading day.
Yep. Have a good rest of the day. See you, man.
Yeah. You too.
Bye.
See ya.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.